Hello guys, welcome to SMC trading course. Hope you all doing great. In this video, I'm going to cover high probability order blocks. So you know that trading is a game of probability, and while you are trading SMC, you see that when the market moves, it creates a lot of order blocks and you are confused which order block to target. So this is a very important video, and in this video I'm going to discuss which order blocks you should target and which order blocks to exclude. So these are the confluences which you should keep in mind, and these confluences will help you detecting the high probability order blocks and the order blocks that you target for your trade. So the first confluence is the order block which is not mitigated. You know that when the price moves, I'm considering it for an uptrend, what the price does is that the price moves up, comes back to this order block here, mitigates this order block, and then shoots up again. But sometimes what happens is that the price comes down but did not mitigate this order block, creating another order block here and then shoots up again. So while trading, you see that this order block is mitigated, this order block is mitigated here, this order block is not mitigated. So as a SMC trader, you don't consider these order blocks. So don't take these trades while the price already moved up like this. Don't take your position like this. Thinking that the price will come back to this order block. Instead, target these order block up here, because this is an unmitigated order block up here. Same is the case for a bearish market. The price comes up, mitigates this supply order block, moves down, comes up, mitigates, moves down, comes up. But what happens is that the price did not mitigate this order block up here. So consider this order block as a valid order block. You see that this order block is mitigated, then this order block is mitigated. So as a SMC trader, you don't consider this as a valid order block. Instead, this one is a very valid order block. So I hope that you have understood the first confluence. Next we come to imbalance. So now I'm going to show you through diagrams how this imbalance helps in detecting the order blocks. So when the price moves up, comes down, and then again moves up, comes down, and then shoots up. So as a trader, which order block that you should consider? This or this? You see that there are two order blocks which is not mitigated. I'm considering the fact that this order block has a lot of imbalances. This order block has imbalance, and this order block don't have any imbalance. Whenever you see that this order block has a lot of imbalances with it, but this order block has no imbalances, even if these two order blocks is not mitigated, you must consider this as a valid order block. So there is a chance that the price might retrace like this to this order block and then shoots up. So imbalance acts as a confluences up here, and this validates this order block to a high extent. And now I'm going to show you with one example how imbalances helps you in detecting the perfect order block. I am moving on to LMC. This is the trade I've already shared with you. So you could see here that this is a very valid order block up here, and this is another valid order block up here, because there is a clean institutional candle and there is another clean institutional candle. This order block is not mitigated because the price did not come back and then shot up. But this too is also a valid institutional candle. And whenever you see this two valid institutional candle, we see that there is huge imbalances up here. See that there is imbalance. But for this, there is no imbalance, All the imbalances are filled up here. So imbalances up here validates this order block to a high extent. And for this case, the upper order block is a very valid order block than the lower one. And you could see how the trade played out well for this analysis. And how imbalance act as a very important confluence. And now moving on to liquidity. This is a very important confluence, and whenever you see that liquidity is created near an order block, you could go for the trade even without a confirmation. So now I'm going to show you how this acts as a very important confluence. Suppose I am considering it for a bullish market. The price moves up, comes back to tap this unmitigated order block here, then shoots up again, creating huge amount of imbalance. But before coming to tap to this order block down here, the price is creating liquidity. What happens next is that to tap this order block down here and grabs all the liquidity up here and then shoots up again. So whenever you see that huge amount of liquidity is created above this order block, you go for the trade even without confirmation, because the liquidity up here causes more retail traders to enter the trade, and then comes the smart money which grabs all the liquidity and mitigates their order block up here and shoots the price up. So this is the importance of liquidity, and whenever you see liquidity coming up, you go for the trade. And now coming to another important confluence, that is the order block which causes breakout structure. So now I'm showing you with example how the order block which causes breakout structure is a very important confluence. You might see that the price moves up, comes down to mitigate this order block down here, and then the price shoots up again, comes back, shoots up again, comes down, and then gives a rapid move up. What happens is that you see one order block up here and you see another order block up here. So as you see two order blocks, it confuses you, because when you see these two order blocks, it confuses you which order block to consider. And this is where this confluence come into play. So whenever you see that this order block causes breakout structure to the upside, breaking this high, this is a very valid order block, because the institution placed their huge amount of orders here and caused the breakout structure to the upside. So there is a high probability that the price comes, retraces back to this order block, and then shoots up again. So it's a very important confluence, and you must keep this in mind. Next we come to find institutional candle and go to variable time frames to find the best candle. So I've taught you that there are two types of institutional candle, that is a solid body candle or a clean doji candle. So whenever you don't find the clean institutional candles, you go to variable time frames. Suppose for swing you are trading one day time frame. So if you don't find the clean institutional candle, that is a clean doji candle or a solid body candle in 1 day time frame, you go to 2 day time frame. And whenever you see that clean institutional candle, you mark that point of interest and mark your proper order block and take the trade. So now I'm showing you one diagram. You see that the price retraces back to this order block up here, shoots up, comes back to this order block up here, and then shoots up again. So whenever you are going to mark this order block, sometimes you don't find the proper institutional candle. As a result, what happens is that you miss your trades, or the price did not tap to a proper order block. So what you should do is that you go to variable time frames at that point of time. I'm going to show you with one example how to find the proper institutional candle. Now moving on to Bajaj Auto Limited, I'm going to show you and how moving on to variable time frame you're going to identify the proper order blocks. You could see here that the price consolidated here for a bit and then shot up again. While the price shot up, you could see that the price created a hammer candle up here. So this is not a proper institutional candle, and before that it is an upside hammer. So these two candles are not the perfect institutional candle. So what I did is that I moved on to 2 day time frame. As I moved on to 2 day time frame, I could clearly identify that there is a clean, a solid body candle up here, a solid sell candle before this massive move up. So I marked this as a valid institutional candle, and you could clearly see that the price tapped to this order block and then shot up again. So this is how you move on to variable time frames to find the perfect order block. I'm showing you another example. Alchem. Here in 2 day time frame you don't find the order block, but you could see that the price consolidated here for a bit and then shot up again, creating a lot of imbalances. So if you go to one day time frame, you could see that there is a clean institutional candle down here, another clean institutional candle. the perfect to doji candles, and you mark these order blocks. So this is how moving on to variable time frames help you to mark the proper institutional candles. And now I'm going to show you how the order block that sweeps liquidity acts as a very important confluence. Sometimes in a bullish market, you could see that the price is moving up, comes down, then moves massively up, then it creates liquidity like this. And suddenly what happens that the price sweeps all the liquidity and shorts up again, causing this breakout structure up here. Here you could see that the price swept all these liquidities up here, gives a spring and shot up again. So what happened is that this is a very valid order block, because before this massive move up, it swept all these liquidities, grabbed the money here and then shot up again. So there is a high chance that the price is going to retrace back to this order block and gives a massive move up. And now I'm going to show you with one example how this adds as a confluence. I'm opening JSL. So in this trade that I've shared, you could see that the price moved up, created this wick here, and then moved up, causing breakout structure, and then caused a massive move up. Before this massive move up, you could see that the price retraced back and swept all these liquidities up here. Consider this as an inducement, and the price swept this liquidity and then shot up. You could see that this is a very valid order block. This is a very valid order block, and you take this order block, put your positions, and then so as a SMC trader, you mark this as a valid order block and you take the trade. And there are many trades that I've showed you where the order block sweeps the liquidity, and I've written that here like this, order block that sweeps liquidity, and it adds as a very important confluence. Remember. And now moving on to very important confluence, that is fib level. So sometimes you could see that the price moves up, mitigates this order block, moves up, comes down, and then moves up again. So you could see that the price mitigated this order block before this massive move up. Again, there is another order block here which is left to be mitigated. There is another order block here which is left to be mitigated. So whenever you see these two order block which is unmitigated, you take your fib levels from this move down to this move up, because this is an unmitigated order block down here. As you see, the down order block matches with your fib levels, but the order block up here doesn't match your fib levels. So you consider this as a valid order block instead of this. And this is a very important confluence, and you must consider fib level as a very important confluence. And without this confluence, don't identify your order block as valid, because this is a very important determining order block validating factor. And you could write all the confluences in your diary, and before taking any trade, checklist most of the confluences here and then go for the entry. So this is the end of this video, and now moving on to the next session.